Hello everyone, how's it going? In this video, we're going to talk about Mullen, trading under the ticker symbol MULN. Mullen is a very exciting and interesting stock to cover because of its high volatility providing opportunities and the ongoing projects that may fuel the speculations even further. At the same time, it's a company that has a hard time proving to the market that its relevance is for the long term and not just the short term speculation. In this video, we will go through the latest fundamentals, the price actions, and my analysis, as well as my recommendation to hopefully help you make the best decision possible. If you appreciate my content, please consider to drop a like, comment, and subscribe to my channel. Also, please check out the links down in the description, as every help is greatly appreciated. So over the past few days, Mullen has been on a very clear uptrend in the stock market. And as we speak, it's piercing above the 40 cents level. I don't know if it's necessarily going to hold there because today it's Friday, but if it does over the next 3 to 5 trading days, then we can definitely say that, the bullish phase is ahead of us, clearly. And this is mainly because recently Mullen has announced quite a few positive news, like new partnerships, new strategic collaborations, new clients here and there, new programs that they want to test out. And right now we have approximately 60 days to prove, well, they have around 60 days to prove that whatever they're trying to pan out, I guess, is going to work. So with that being said, is Mullen a stock that you should buy? It really depends on what is your overall positioning in the stock market. Are your holdings very diversified across different categories of stocks, different sectors, and so on? If you're very diversified and you're comfortable with trading like volatile small caps, then by all means, now could be a good time to start buying Mullen, with the expectation in mind that the stock can still go back to 30 cents on a whim. First of all, because the stock can be pretty volatile. And the other thing is because Mullen, unfortunately, is not necessarily a stock that I would necessarily trust with all my heart. So I'm willing to say that they are a company who can announce a lot of positive news that can take the market by surprise, that they can, inject new puffs of energy into people's decision-making process, right? Whenever I read a Mullen article, I want to buy a bit more to boost up my position. But with that being said, let's not lose sight of the fact that as far as I'm concerned, Mullen still has to prove a lot to the market, that they are relevant, that they are legit, for me to trust more capital than whatever I'm already giving it, which is right now I think it's about 0.3% of my portfolio. So maybe I'm gonna buy a bit more, but not that much more, just because I personally am only comfortable with trusting it with that level of capital. Of course, no risk, no gain, but sometimes less risk and less losses as well. And we have to remember that, especially in this kind of market conditions where EV is no longer necessarily one of the stock market's darlings, well, if something negative happens to the stock, we might be left holding the bag, and we might be holding the bag for the long term. Like, if I were to ask myself, would I be investing into Coinbase if Coinbase went public five years ago, right? Would I necessarily control my exposure back then? Of course not, because everyone would invest a lot of money into these kinds of companies. If people asked me back in 2020 and 2021, would you invest a lot of money in cryptos? Of course I'm going to do this. But we're now in 2023. And my feeling is many of those hot shots are no longer that attractive in the grand scheme of things. And I would say that Mullen is an interesting outlier, that they can provide a lot of good opportunities for people who want to like go in and go out. This is what they're for, essentially. This is what essentially this is the new ideanomics for me personally. Like, ideanomics, for those who don't know, they used to be a, well, not used to, they are a holding that people are putting in like different sorts of companies that they purchase along the ways, so that ideanomics can be, I guess, advertised as one of the companies that are in the know, that are following the latest trends, that are trendy, that will benefit from the latest hypes. Mullen might be trying to do something similar, albeit in a more restrained manner. So, with that being said, would I be recommending Mullen for everyone? Absolutely not. But if you're someone who's comfortable trading small caps and trading volatile companies mostly based on the financial market speculations, then Mullen might be a decent choice. Mullen is a publicly traded company operating in the EV sector, and it is listed on the Nasdaq Stock Exchange. The company designs, manufactures, and sells a range of electric vehicles, including car, buses, and trucks. One of the key factors setting Mullen apart from the EV sector is the focus on developing long-range electric vehicles. M115 is a long-range electric truck that the company is trying to develop and eventually to manufacture. It has a significantly longer range than most other vehicles currently on the market, making it an attraction option for people who would like to invest eventually in this massive potential success. Another thing is that they are investing in developing heavy-duty electric vehicles, such as buses and trucks, designed to handle heavy loads and perform demanding work. This is a unique offering in the EV market, where most other companies are focused on developing cars and light-duty vehicles. In terms of financial performance, however, the company has been having a hard time generating income and consequently digging itself a large financial hole that they have to fill every time with further dilution. In terms of the long-term price action trends, despite the recent upward momentums such as IGO distributions, the company has been having a mostly bearish trend over the past 5 years, first trading between $5 to $10, peaking at $15, before finally falling back to below $1. What this suggests is that Mullen has been hard hit by not only the market downfall, but also its own fundamental weaknesses. This assessment recently begun to change, but I would say that it hasn't reached a convincing turning point, and that to a point, it still explains why Mullen is a stock I would recommend to trade instead of investing in. Regardless of the recent distribution contract or the short squeeze potentials, the short interest surrounding Mullen remains real, and that the interest surrounding Mullen, period, remains the expectation to scalp a quick gain. With that being said, I also want to add that things can always change within this sector. So if today I say that Mullen shouldn't be a stock that you invest in, maybe 6 months from now things could be different. The online communities have been initially skeptical towards Mullen. Nowadays, it's mostly something that follows the trend. So for example, if things are looking good, they will find the positive aspects of Mullen and to say that, you know what, this is why it's been going well. Or if things are plummeting, they're going to say, well, you know what, like such and such reason is the reason why they're doing poorly. And you will also have a small group of fans who will always find reasons for optimism, regardless of how desperate sometimes the situation may be. As far as their online footprint is concerned overall, the biggest factor to consider is whether the price action gives people enough motivation to have a position in Mullen. The other factors have sometimes served as a pretext to buy its shares, but more often than not, the price action has already sent that price signal to the market to react positively. On top of that, the macroeconomic trends affecting the sector have also been putting pressure on the stock price, including the increase of interest rates, the capital flight from growth stocks to other sectors, the conflicts around the world, the supply chain issues, and the expectation of a demand that will be softer than usual. And this is going to continue over the next couple of years due to a recession. Another factor to look at is how the flagship company in the sector, so in this case Tesla, has been doing. The EV sector being a relatively new industry, a lot of it is still in development, including the investor's mentality. People often determine whether they want to buy EV stocks based on how Tesla has been doing recently. The idea here is to profit from a sector-wide gravy train conducted by Tesla, pulling all the other ones behind it. We have seen on multiple occasions how the share price of a company like NIO, Lucid, Xpeng, or Mullen follows similar trends compared to Tesla. Of course, Mullen doesn't always follow the trend, but it has played in its favor, but also the other way around. So we have to be mindful of those factors because they will definitely paint the picture of the surrounding environment in a specific direction. With that being said, let's also take a look at Mullen's financials, which might give us some hints about the decisions that the company has to take in the upcoming periods. One thing to note about its financials, it's not generating income for the moment, but we know for a fact that they are currently distributing iGos in Europe. So this will eventually change with the upcoming reports. The other issue is the cash reserve. So I personally believe that Mullen is a company that has to rely on continued capital injection by selling its equity to continue its going concern. This is concerning to say the least, but in my opinion, this is going to continue for the foreseeable future. In other words, the retail interest has to be significantly larger than the dilution that will be announced in order for us to make money. So like I said before, the fundamentals don't necessarily help Mullen. They are currently a dead weight that will eventually push the price down. But if we rely on qualitative factors, things that are beyond the immediate reality, but if we project the company to a brighter future, then it's possible that a large number of people might pile in and buy the stock up. This is the kind of behavior we're expecting to see if we decide to invest or to trade Mullen. Because in terms of trading, Mullen actually has a very good shareholder structure. So they have a mostly retail shareholder base. And what this means is that they will be far more volatile than typical stocks. Of course, I know that BlackRock recently increased their holdings, but this is not doing it for me. That alone doesn't mean much, personally. So the lack of significant institutional participation means that I personally don't want to put money in for the long term. The key behavioral difference between institutional and retail shareholders is their investment horizon. Institutional buyers tend to stay for longer term, with years or decades as the measurement, whereas people who are in as retail, they tend to get in and out very quickly. Sometimes after a few days or weeks, they might already be gone. So the short squeeze seems to be the massive catalyst that we are dealing with at the moment, and this is something that can present excellent opportunities for us. So currently, there is a significant position, around 40 million shares, that are being shorted against Mullen. The majority of them are traded outside of public exchanges, so therefore by institutionals. The potential of the short squeeze in this case is significant. The short squeeze is a phenomenon that is observed when traders decide collectively to buy up the price of a stock, forcing those who are holding the shares to redeem them. The reason why they may have to do this is because they want to avoid further losses. So the redemption would act as a further wave of purchases, pushing the stock even higher. So it's important to note that regardless of how many stars are aligned on paper, the short squeeze itself may never happen, just because there are a number of factors outside of anyone's control. will determine if the short squeeze is something that will occur. So personally, I would say that now is a good time to buy Mullen because it's clear to see that the bullish momentum is in effect, and we can reasonably expect that the stock will go above $1 by the end of May, maybe, or by the end of March even. So this is why if you want to come in for a quick scalp, then absolutely, by all means, now is a decent time to start doing so. For those of you who want to mostly buy stocks for investment, I would say that Mullen still has some way to go before we can trust our money long term with this company. So my exposure would be between 0.5 to 1% of your portfolio in Mullen overall.